I am Troy McGuire, co-founder of FinTech TV, and Taking Stock starts now.
You understand that? Do you know that?
Him?
Never.
I'm just warming the seat for you,
Dude,
bud.
correct.
You're a tough act to follow. I do my best.
All right, 2 minutes to go here into the closing bell. At this point, it's more like 90 seconds. The Einstein of Wall Street, Peter Tuchman, joins me now. It's going to be one of these type of broadcasts, folks. Peter Tuchman, look, a market that was up and then down. Caterpillar putting some downward strength on the Dow. What happened?
You know what? We saw this happen last week. After last Tuesday, when the president announced he was not going to have the war of wars, when the day that we had this spectacular trend on the way up, Wednesday and Thursday both opened up and then faded. And I said it was just fatigued buyers. And I think trying to create more momentum, because it's been a buyer's market right now, and I think this is just nothing more than that. You know, by the end of the day, a lot of the buyers get enthusiastic and they want to get involved, and maybe they overplayed their cards, or else they just got tired. It's not like heavy sell side came in. It's just that the buyers are sort of backed off. It could be, look, there's so much news coming out and trickling out about what's happening. It's an oil trade once again, right? And I think it's more of just a fatigue buy side rather than some aggressive sell side. We're not seeing any of that. I mean, if anyone goes back to Wednesday, Thursday charts on the S&P from last week, it's identical. Strong start and then sort of a pullback.
That's right. We're seeing the oil benchmarks up. We got CPI inflation tomorrow morning.
Absolutely.
That's a market mover.
Yep.
Certainly is. Peter Tuchman, thank you
Love
for being
you guys.
here.
Nixon 5.
Nixon 5. Phil Rosen on deck. Much more Taking Stock coming up after the closing bell. But first, time for the close. There you go. I've learned after a year of doing this job, when the crowd is cheering, it's best for me just to step aside. The Greater Houston Women's Chamber of Commerce here at the big board, just ringing the closing bell. They'll also join us here on the broadcast coming up in just a bit, as will the great Phil Rosen join us momentarily. In the S&P, energies, utilities, industrials, the outperformers, the lagging sectors in the S&P today. Consumer staples, consumer discretionary, and real estate. You don't frequently see staples and discretionary moving in the same way. Over to the Dow we go. Home Depot, Caterpillar, IBM, some of your outperformers, your Dow laggards on the day. Honeywell, Alphabet, and Nike. Mag 7 mixed. Meta had a strong outperforming session. Alphabet shares underwater just a bit. Also catching a bid, the major airlines led by JetBlue. The home builder stocks, as we did see slight downward pressure, not a big dramatic move, but we did see a fall in treasury yields on the day. And the memory stocks, the DRAM ETF, up more than 2%. Let's bring in the man himself, the great Phil Rosen, Chief Market Strategist at ProCap Financial, and a very good friend of ours here on the broadcast. My man, thank you as always.
Thank you, JD.
No disrespect to the Dow. A lot of people like to call it boring, but don't look now. Basically neck and neck here with the tech-heavy NASDAQ. What does that tell you about where this market is?
Well, the Dow's been pretty much keeping up with the tech-heavy NASDAQ, as we call it, with half the volatility. So you have all the boring names, all these blue chip, old industrial stocks that have been going up, pretty much keeping up with the AI trade, even though no one talks about it. So I look at the Dow, that's been great. The equal weight S&P 500 has also been beating the market cap weighted S&P 500, and that tells me the average stock in the index is going up higher than the index itself, which usually doesn't happen because it's led by these mega cap tech names, and everyone always complains it's such a top heavy market. The average stock going up more than the index tells you otherwise.
How healthy, how broad is the bull market when you look at something like equal weight S&P? Listen, the regular S&P is having a great year. We talk this 8 to 15% annual return figure all the time. It's one of our most frequent go-to one-liners. But how about equal weight S&P, knocking the cover off the ball?
So all the names that you were listing before I joined the show a minute ago, those are the most boring names in the stock. You said Home Depot was up big today. Oh, yeah. Everyone's going to be focused on the semiconductors, the hyperscalers, and those have been pretty strong this year as well. But again, if you look at the equal weight, if you look at the Dow, these are all on a great trajectory this year and probably better than everyone else expected. And you see this story of rotation playing out in real time. You have healthcare, financials, utilities, all these boring sectors, right? Pretty much everything not AI is doing very well, and we're seeing that reflected in earnings strength as well. So earnings across the board have been crushing it. I think we were at 50% earnings growth for the second quarter. And I know that's a little inflated from Alphabet and Amazon, but still smashing records. So to me, I think we're in pretty good shape.
In the world of investing, I think you and I have learned after all these years, boring is sometimes better.
It's the best.
It is the best. How about small caps? Russell 2000, the best of the bunch today, up 0.3%, up 21% on the year. New all-time high after all-time high. How about that outperformance?
This is another sort of hidden sector that no one seems to be talking about. If you have small caps almost doubling the S&P 500, very unusual, very rare for that to be happening, but that tells me that the AI trade is not just a top-heavy phenomenon. You have small businesses, smaller companies across the country that are actually doing better. And sure, there might be some froth because you have a lot of unprofitable names that have been going up like weeds, frankly, but at the same time, there's not much to be too worried about right now as far as the broadening out and rotation story.
How much of the small cap rally or any other thing that you and I have been talking about is contingent on what the FOMC does next? A big September meeting coming up before we know it.
We have been so wishy-washy on what the Fed's going to do all year. Kevin Warsh has his own agenda. He may or may not share that. But at the same time, stocks have powered through every single Fed uncertainty moment of the year. And frankly, they did the same thing last year too. I don't know why that would suddenly change. Sure, we might get a little inflation scare at some point and the Fed may have to respond. But generally, I've still been in the camp that we're more likely to get a cut this year than a hike, which is pretty non-consensus right now, but I like our odds.
Most importantly, out of everything else you and I have talked about, if I'm not mistaken, this is Phil Rosen's birthday week.
Oh boy,
But
you're exposing me.
Happy birthday, dude.
Thank
How
you.
could I not? The great
Thank
Phil
you.
Rosen, good friend of mine, good friend of ours here on the show, chief market strategist at ProCap. All the best for the big day, dude. Thank you as always.
Thank you very much.
Don't go away, folks. A lot more Taking Stock coming up live from the trading floor of the big board right after this. Welcome back to the broadcast. Joining us now via Zoom, Jeff Borst is CPO at Blockstream, all to talk about a story we had been bringing our viewers the latest on the last week. Jeff, the cold card hack. What a story. More than 1,800 Bitcoin stolen. The wallets keep Bitcoin offline. How did the hackers still manage to steal what they stole?
Thanks for having me, JD. I appreciate it. You're right. It's been a somber week in the Bitcoin community. Basically a vulnerability in how some of the cryptographic material that gets calculated on behalf of a user to secure their keys was compromised. And it was compromised in a way that allowed remote attackers to unlock Bitcoin on the chain and basically take money from users who were just trying to use Bitcoin with enthusiasm. So it was a very sad day for the industry.
Jeff, was Bitcoin itself hacked, or was the wallet the problem?
Oh, Bitcoin itself is safe and secure, and no funds are at risk. The vulnerability here was in a particular element of the hardware wallet that was being used by many users. And I will say that, after a moment like this, it's inspiring to see the way the Bitcoin community responds. Essentially, all across the community, developers have been rallying to review and look for additional vulnerabilities in open source code. And so now, despite the sadness of that incident, we feel that the technical fundamentals of Bitcoin are stronger than they've ever been.
The issue involved what are known as secret recovery phrases. What is that, and what exactly went wrong?
A recovery phrase is just a device that lets somebody re-input the random number that is at the sort of heart of the private key that lets you lock your Bitcoin on the chain. So the recovery phase itself was essentially guessable because the randomness that was supposed to be provided by the underlying product was not random enough. And that was due to essentially an oversight in the configuration. As I understand it, the hardware had the capability to generate strong, secure random numbers, but unfortunately, it was not utilized correctly. And that created an opportunity for people to guess the keys of users on chain.
If you own a cold card wallet, how do you know if you're actually at risk?
If you own a cold card wallet, the recommendations across the industry are it's time to move your funds to a safe and secure device. So I think the safest thing to do is assume that you're at risk and to identify a product that you trust to move your funds into. We're always happy to offer solutions at Blockstream, such as the Blockstream Jade or the Blockstream app, but there are many reputable providers on the market, and I would recommend moving your funds in an abundance of safety.
All right, we're going to leave things there. Jeff Bourse, please come back and see us here in person at the New York Stock Exchange next time. Great to get your take on a really important story we'll continue to follow. Jeff Bourse, CPO at Blockstream. Jeff, thank you. Folks watching at home, don't go away. We got a jam-packed edition of the show on this Tuesday afternoon. You don't want to miss what's going to happen next. More show after this. Stick around. Welcome back to this Tuesday afternoon broadcast of Taking Stock down here on the trading floor of the big board. Friend of the show, Michael Monahan, joins us now, PM at Founder ETFs. Good to see you again. Thanks for taking some time.
Great to be here, JD.
So we are in the, I don't want to say we're quite in the middle of earnings palooza. We're kind of well past the halfway point, so to speak. Better than expected. Obviously, we got a lot of macro headwinds. How are you thinking about market performance right now? Obviously, one day ahead of a pretty big CPI inflation print tomorrow, Michael.
You're right. We've had great corporate earnings reports, and you're also right. We've got a complicated macro situation. We describe it as three waves moving through the market. We've got the Middle East instability, we've got the AI CapEx build, and then jobs.
Talk to me about the jobs component. We got the jobs print for the last month on Friday morning. We were expecting a positive print of 83,000. It's a pretty big swing and a miss to the downside. Minus 23,000 was the print into Friday's session. No big surprise that rallied equities, but does it tell us there's maybe a bit more instability under the surface we have to contend with?
I think we certainly do have to watch job numbers. It's our third wave, sort of bouncing between the Goldilocks of the fear of AI displacing jobs, but also if the economy gets too hot, it's going to put Warsh in a tricky spot. So we think this jobs number gives Warsh the ability to not hike rates, and equities are liking that from a terminal multiple perspective.
Talk to me a bit more about Mr. Warsh's job here, how easy or probably how difficult it is. We've got 3 FOMC meetings left this year, one in September, October, the last one for December. We didn't come into 2026 thinking rate hikes were on the table. Now we're kind of split for September, but it's amazing how quickly the narrative has shifted, isn't it? What do you see out of the Fed?
Absolutely, and that's why we describe it in the waves. The waves come back and forth, and the sentiment has shifted multiple times. We think we're going to see a Fed under Warsh where he speaks a little bit less, more of the Greenspan style. But I do think the data coming out, we've got a little bit hotter on some inflation metrics, energy as well, but I think these job numbers are going to give him the cover to hold rates steady, which we refer to as a phantom rate phantom rate cut.
Michael, give me one part about these markets that you're following that you think we are not talking enough about.
I think the payoff in this AI investment is really what we need to focus on. I was just with Ron Mittelstadt from Waste Connections. It's an industrial stock, right? Picks up your garbage. He's been working on AI since 2018. He's on his Q1 conference call this year, he said he was going to put $100 million into his AI objectives, and he thinks it'll pay back in $100 million of EBITDA next year. So this aligns with some of the things that Brett Johnson said on the SpaceX call, that you're getting a 1-year payback on some of these investments. I don't think people are recognizing that. I think more people need to see that and what it'll do for corporate profits.
Yeah, you mentioned AI and hyperscalers. I think this is the first time since you and I have spoken, since we've heard from Alphabet, some of the other so-called Magnificent Seven tech stocks. There's an awful lot of spending that is being done right now with not necessarily any promise or guarantee of the future return of those profits. What have you made about what we've heard on a lot of those earnings calls as of late?
So I'd give a little light pushback on the no chance of earnings. Remember, Google talks about their business growing at 80% with 35% operating margin. The Brett Johnson statistic I gave you, the Ron Mittelstadt statistic that I gave you, we're putting $1 in and getting $1 back right away, 1-year payback. So we think those are very good investments. We do think what's concerning the street is some of these companies that had a near monopoly, let's focus on Google, had a near monopoly in display search, but now they're competing against Elon Musk, right? They're competing against Amazon in these data centers, and so they've gone from a near monopoly into a very good business, but with very good competition.
Yeah, of course. All right, Michael Monahan, PM at Founder ETFs, one of our favorite guests here on the broadcast. Please come back and see us anytime. Good to see you.
Anytime. Great to be here. You have a great show.
Folks, don't go away. A lot more Taking Stock coming up right after this.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is information velocity. Information velocity describes how quickly information moves and how fast markets react once it does. In modern finance, speed doesn't just accelerate decisions, it changes them. When information moves slowly, people have time to verify, interpret, and I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is information velocity. Information velocity describes how quickly information moves and how fast markets react once it does. In modern finance, speed doesn't just accelerate decisions, it changes them. When information moves slowly, people have time to verify, interpret, and respond. When it moves instantly, reaction replaces reflection. Information velocity explains why. There are a few things here. Markets move on headlines before facts, why rumors become volatility, and why corrections feel abrupt. This isn't about accuracy, it's about timing. Fast-moving information compresses decision windows, and compressed windows amplify mistakes. Let's fast forward to today. Social platforms, real-time feeds, and algorithmic trading means information gets priced almost immediately, sometimes before it's fully understood. So information velocity doesn't create risk, it magnifies it. And systems designed for speed must also be designed for error, because faster information means faster overreaction. That is your jargon translated. If there's a term that you want to explain that helps make sense of modern market behavior, put it in the comments and it might just make the cut. In the meantime, back over to you.
Welcome back to the broadcast. Susan Dyson joins us now. She is CEO, president, and founder of the Greater Houston Women's Chamber of Commerce. She and her team just down here at the big board a few moments ago, ringing the closing bell. It's really nice to see you.
Just so exciting to be here. I mean, it's just like a dream come true. It's been on my bucket list, and to have it right here and celebrate our 19th anniversary this year, the 20th anniversary of the dream of founding the chamber. So it's a great opportunity for us to celebrate.
That's amazing. We were so excited to have you here, not just doing the bell, but especially for me selfishly to have you on the show. What does ringing the closing bell and recognizing companies who support so many women and so many young girls out there, what does this moment mean to you personally?
Well, we would not exist without those companies believing in women and giving them opportunities to lead. It's just been an amazing ride for us, and we are going to launch the Texas Women's Chamber now, so we're going to announce it here, so it has to happen. You're going to make it happen now.
That's awesome. Texas growth. We'd love to see it. Correct me if I'm wrong. The chamber was founded in 2008?
2008.
2008. Since then, where do you think women have made the most progress? And where are still some of the biggest gaps of work left to be done?
Yeah. Well, we're seeing more women serving on corporate boards. We're seeing those numbers rise. We still have a ways to go. Entrepreneur women are being very successful too. You know, Texas is a second to California as far as entrepreneurs. So we're very proud to be part of that equation, and we look forward to helping more be successful and be independent.
What are still some of the biggest barriers that female entrepreneurs face today? Is it funding, connections, opportunity, or a little bit of all of these challenges?
Yeah, I think it's all, but of course access to capital for the entrepreneurs and startups, that's been a big challenge. But sometimes, you know, our biggest challenge is ourselves. Sometimes, you know, we think, oh, we have to have 99% of whatever we're going to do, but really, you know, we have the means and the knowledge, you know, to do anything, but we just need to believe in ourselves.
Why does getting more women onto corporate boards matter? And what does that process actually look like? So I'm sure where you're situated, it's so much more difficult than the rest of us simply see in the headlines.
Yeah, well, I think the statistics speak for themselves. The boards that have women and diversity on their boards perform better. So, I mean, that just nothing else I could say except that. Yeah.
Of course. Here on Wall Street, obviously, we talk about on this broadcast all the time, the ways that artificial intelligence is reshaping the workforce. Why is getting more women, more girls into, we used to call them STEM careers, now they go by STEAM, because we include arts as well. Why is that so crucial to your goals?
Yes, because I think it's just showing them the opportunities that are out there and showing them role models, you know, too, as well, is so important. And we've just come so far. I know when I started the chamber, I had 6 granddaughters and saw the role models that were out there and just knew there needed to be something done that give them more opportunities. And so it's working.
And all these years later, as it continues to work, as you continue to see that real-time progress, what most excites you, not just about where the chamber is today, where you most hope it could be tomorrow?
Yeah, because we're influencing the world. We now have chapters in Mexico, we have France, soon to be in Italy, and of course the UK. So we're spreading our influence, and you know, there are challenges and successes and we learn from each other. So it's just been an amazing experience.
And before I let you go, where can people go if they want to find out more, they want to find ways to get involved after hearing this interview?
Thank you for that. The ghwcc.org.
There you go.
So, yes,
we got the branding right down here on the trading floor of the New York Stock Exchange. You and your team, you're welcome to come through anytime. Please come say hello soon.
Oh, well, thank you so much for all you do to give visibility to women.
Of course. Susan Dyson, CEO, President, Founder of the Greater Houston Women's Chamber of Commerce. Thanks a lot. Don't go away. A lot more Taking Stock coming up right after this. Welcome back to the show. Before we wrap up this Tuesday afternoon edition of Taking Stock, we'll get you quickly caught up on a few of the big potential market moving things that crosses the wire tomorrow morning. It's a big one. Michael and I were talking about a few minutes ago, 8:30 a.m., the CPI inflation print. Economists expecting core CPI to come in at 2.5%, down from the previous month. That was the month of June, down from 2.6%. This time tomorrow after the close, we'll also get the latest quarterly results from Cisco, Cerebras, Inflection, and Jack in the Box. Breaking news, CoreWeave After Hours is reports second quarter results. We'll bring you the latest on what to expect tomorrow in terms of how the stock is moving. Your final tail of the tape on this Tuesday, August 11th, the S&P 500, little bit of downward pressure into the close, finishing down 0.32%. The Dow Jones Industrial Average not very far removed from many sessions of all-time highs, also in the red fractionally, down 0.3%. Folks, how about the NYA? If this major market index is not on your card, it should be to pay attention to. It's the one and only New York Stock Exchange Composite Index, another record-setting close, up 0.07% into the close. And the small caps, the best of the bunch, as Phil Rosa and I were talking about earlier, in the green, 0.3%. We did see Home Depot, Caterpillar, IPM. Those were your Dow outperformers. A little bit of Dow laggards as well, about 50-50 between the Dow 30 components. Honeywell, Alphabet, and shares of Nike underwater today. In the S&P 500, energy, utilities, industrials, those were the best of the bunch, but some downward pressure on consumer staples, consumer discretionary, as well as real estate stocks. The Mag 7 tech stocks, the hyperscalers, so to speak, kind of a mixed territory today. Meta, the best of the bunch, shares of Alphabet underwater. The major airlines catching a bid, led by JetBlue. The home builders in the green, as we saw a little bit of downward pressure for Treasury yields, and the memory stocks up on the day as well. That'll do it for this Tuesday edition of Taking Stock, live from the trading floor of the New York Stock Exchange. What a show. We did it. Have a great Tuesday night. We'll see you again tomorrow from the big board.